It's about that time of day again. My name is Joseph James. Today is Monday, November 21st, 2016, and this is your nightly newsletter. We're covering crude oil, S&P, gold, euro, and the FDAX this evening on the nightly newsletter. Crude is bullish and trading sideways after a remarkably strong run higher today following comments from OPEC over the weekend. The E-mini S&P is bullish and trying to complete the measured move, but appears the buyers are rejecting this higher price, looking for a pullback on the S&P. Gold is bearish, testing a resistance trend line and trying to finish a complete reversal from the beginning of today's session. The euro is bearish after the buyers failed to keep control earlier in today's session, and the FDAX is bullish, trying to push through the highs on the way to retesting the prior high of day. But we'll get another great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up across our favorite markets. Before we jump into our charts, though, I do want to remind you, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link and come join me here on the blog for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Grab those charts and have them ready on your computer for tomorrow's trading session right below tonight's video. You can download those charts. Upper right-hand corner, grab your free pass. If you're not a member here at School of Trade and you'd like to grab a free pass, this is your chance. In the upper right-hand corner, I'll welcome you into the trade room as a guest this week. And of course, on the right-hand side, we got a great frequently asked questions page. If you're brand new here to School of Trade and you want to know the who, what, where, when, and why, we're known as being the industry leader in trading education and professional grade strategies. Check out the frequently asked questions page on the right-hand side of the website. And please don't forget, I'm always here standing by to answer all your questions. Hit me up on the live support button on the right-hand side of our website. Hope you guys had a great weekend out there. Another big week ahead of us. We do have a holiday shortened week here on the schedule this week. Great time of the year. We got, of course, Thanksgiving holiday on Thursday, and of course the day after Thanksgiving, the recovery day, right? The Black Friday on November 25th. So what you want to keep in mind here for us this week is on Thursday and Friday, markets are actually closed here in the U.S., as you can see here on Thursday. This will be a very low volume environment this week on Thursday if you do choose to be trading. And of course, on Friday markets are open. You will see early morning opportunities on Friday, but it will be another very low volume environment on Friday as well. So I would definitely say if you wanted to trade the holiday here this week, skip Thursday, trade the first few hours on Friday, rest up, and get back at it the following week. So be aware of that, though. Thursday, Friday this week, of course, unless you're not paying attention out there, it is that time of the year again, going into the holiday season. And the Christmas music's going to start on Friday morning, right? So I hope you're ready for that. I hope you're excited about that, right? Being bombarded by Christmas music everywhere. The bottom line, though, is Thursday, Friday, be aware. Thursday markets are closed. Be aware, though, there will be trading around the globe on Thursday. Will be very, very low volume. Friday markets reopen, right? And you should be able to get a few hours on Friday morning. The meat and potatoes here this week be Monday, Tuesday, and Wednesday. Of course, came out of OPEX last Friday. No major news on the schedule for Monday. Tomorrow, of course, being Tuesday, the 22nd. And we have some decent news tomorrow. We get the retail sales from our good friends in Canada, and we get the existing home sales right here in the U.S. tomorrow. So 8:30 a.m. and 10 a.m. Eastern Time. Those will be the big news reports of the morning. Don't forget, don't underestimate the power of news from Canada, right? We have a very big, one of their biggest exports, right, is crude oil. So we definitely expect to see the market on crude oil tomorrow morning around 8:30 a.m. Eastern Time. And, of course, the existing home sales number. Saw an explosive new home sales number last week, if you recall. It was last Wednesday, last Thursday. So, of course, tomorrow we'll see more from the housing market tomorrow morning at 10 a.m. Eastern Time. This is going to be crunch time here the next few days because, as you know, most traders here will not be trading on Thursday or Friday. So they've got to get it all done Monday, Tuesday, and Wednesday. So be aware, tomorrow we're expecting to have a pretty darn good day tomorrow. And of course, with all the volatility here happening right now, it's expected to be another wild one here coming out for a Tuesday session. Let's jump right in. Crude is bullish and trading sideways after a remarkably strong run today following the comments from OPEC over the weekend. The bulls have control and their objective is to finish off the measured move, but the buyers are clearly rejecting higher prices, which means that the most reliable buying opportunities will come either after a deep pullback or a strong push through these highs. Some important things to keep an eye on will be the trading range you can see that I've defined here, as well as the reversal lines for tomorrow's session. Now, once again, we open up the session here this morning at a weekend gap, right? There's a difference between the price we closed at on Friday afternoon and opened up on Sunday evening. These are electronic markets, of course. We don't trade the pit session anymore. The pit's been dead here for a while now. It'll be, I'm sure, soon converted into either a parking lot or a museum. The bottom line, though, is this is the electronic session. Opens up at 6 p.m. Eastern Time on Sunday and goes all the way through until Friday at 5 p.m. Eastern Time, right? So a big week, Sunday night, right, through Friday night. And of course, we opened up, right, we get a weekend gap higher. I probably should check my spelling on that. That is not weekend. There we go. Got the spelling correct now. And we see a very strong bull market. We picked up on this real strong bull market pretty much instantly this morning once we opened up our trade room at 8 o'clock Eastern Time. Don't forget, come out and join me as an advanced member and trade with me every day in the trade room. So as we push higher here, we recognize right away here we had a number of measurable legs going higher here. So we do have a bunch of small legs there. And we know that the bulls are likely hunting for a larger measured move, right, up and around that 48.79. Get a triple up overhead, 48.69, right, measured move overhead at 48.79. Very strong bull channel. And what really is difficult to miss is this real kind of laziness now of this bull market. So it's obvious to us at this point now, the buyers have not reached their objective, but for whatever reason, buyers are rejecting the idea of buying price at this point, right? They're rejecting higher prices. We're going to see a bunch of that today, actually. S&P showing buyers rejecting, FDAX showing buyers rejecting. We're going to see a bunch of those examples here today. Whenever I see a market that makes a real strong run and then starts to kind of, putter out here going sideways, I always know there's really one of two scenarios I want to be looking for. Scenario one would be the break below, right? Little trap low, get those sellers to fake out, right? And then buy right back up. This, of course, would be your trap / seller failure, right? Counter trend, sellers trying to reverse that trend and buying the dip, right? Buying the dip. Get it a pullback, right? Attract more buyers into this market with a lower price. The other option would be, of course, now a strong break through the high that can now hold a pullback. Now, with that said, I always like to use my moving average and make sure that moving average can get and stay above the high of that range. So when I look at a strong bull market like this that starts to pull back and can't quite show me that amount of confidence going higher, I'm looking to buy the dips or buy the breakout pullback. The key, though, is that if you look for the breakout pullback, it needs to be really strong, right? What I don't want is I don't want to see one of these, right, where it pulls back and now what I don't want to see is, let's do something like this, right? Get that move up. Right, there's that trading range. Again, buyers come in, they buy the low, beautiful. What I don't want, though, is one of these. I don't want to see, again, assume this is now your moving average here, right? I don't want to try to buy the pullback buying below the high of that range. And what I like to do is I like to use the moving average. Get the moving average up above the high of that range, and then I can be a whole lot more confident buying, right? Buying that pullback. Whenever we break to new highs or whenever we break through a major milestone, whether it be a channel or a move, a measured move or a range high like we're seeing here, I like to use that moving average as an easy way for me to tell if the breakout is strong enough. So obviously here the buyers have their eyes on that 48.12, right? Break down, sellers can't hold, and buy it back up. That would be the one that everybody's waiting for here tomorrow. And furthermore, if it does break lower here, it's not just that 48.12, 48.12, 47.93. Keep an eye on these here. Reversal lines at 47.79. Reversal lines here at 47.40. These are all going to be areas where the deeper it pulls back, right, the more buyers are now going to be interested. Over the weekend, we heard another vague statement from OPEC talking about how the production freeze was getting more and more realistic. We then heard from some investment bankers over the weekend who said, well, we're starting to hear that this might be more realistic. This is completely the opposite of what we heard last week. I feel like I've seen this headline a million times in the past few years, right? OPEC's going to freeze production. Price spikes for a few days and then collapses back down to that 45, 42, 43 area, right? And we keep doing this over and over again. The bottom line is, I don't think you can trust a word out of OPEC's mouth, but this is a bull market and we're going to trust it as long as it continues to be bullish. One thing you do want to keep in mind though is, if it does pull back significantly here, you want to be thinking in terms of this. If we do get a strong pullback here, the sellers will be able to take control of this market. However, once it pulls back far enough to attract more buyers, then we start seeing that opportunity now to buy it on the way back up. So if you're a seller right now, as this price gives us a nice deep correction, you can look for these short-term scalps to the downside. Again, just be careful though, because you're in a bull market. If I had to guess right now, I would say let's skip the first one, because that's going to be the one that is the most difficult, because it's still a bull market at that point. Skip the first one, right? Let the bears take control, get below this reversal line, right? And then look for that second pullback. That should be the one that gives you a lot more reliability. We don't want to sell in a bull market until it becomes a bear market, right? And the buyers need to let these sellers get a new lower low, hold the pullback, right, and take that price lower. From there, then obviously now we see that breakout pullback going higher, right? So if we do get a deep pullback here, right, which we would love to see, obviously, if we get a nice deep pullback here, sellers, make sure you get that lower low, hold that pullback, number one. That will give you control, and then you'll be at least now in control of the market in the short term, right, to get that scalp on the pullback. I say scalp. I don't anticipate this turning into a full-blown reversal. I've been wrong before. I might be wrong again tomorrow, but with this of a strength to the upside and kind of the lingering words of OPEC ringing in my ear from this weekend, we're probably in store for at least another day, maybe day and a half here, right, of overall bullishness until the sugar high of this whole event, right, starts to wear off. So watch out for that on the pullback. As it goes higher here, again, be careful here as it goes higher, right? We really don't want to buy high unless we see that real strong push. Strong, how strong? Strong enough to get that moving average up above the high of that trading range that I've tried to define here for you. Obviously, at that point, though, you're running right into the triple up. You're running right into the measured move. So what you want to be thinking about as price pushes higher here is, I really don't like buying high. So wait for the price to even out, look for a trap low, and then buy it on the trap, right? That will be the easier, a lot more reliable that way. You know, again, imagine now a strong break higher. That strong break higher doesn't give you very much room, right? You don't have a lot of room now to buy up to that measured move. Hold on, stay patient, wait for a trap low. Whenever we find ourselves towards the end of the move, we don't want to be buying high. It's still bullish. We just don't want to buy high. We want to buy low using traps at that point. This is going to be a very interesting scenario here. And again, if we do end up running higher here, keep an eye out for another trading range, right? buy the low of that range, look for the breakout pullback. You guys know the plan if it does start to range out. Let's keep going here. We got a lot to cover here tonight. Even the S&P is bullish and trying to complete the measured move, but it appears the buyers are rejecting this higher price, which tells us to expect a pullback in order to attract more buyers into this market. With such a strong move to new all-time highs today, we can assume that any deep pullback will be considered a buy.